Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, March 7th. Happy Friday to you all. I hope you guys have some great weather coming ahead for you guys as we kind of approach spring here in probably a matter of a few weeks. So, we do got the big day today. We got the jobs numbers. So, we're going to jump right into it. So, the Bureau of Labor Statistics came out with their data, and the non-farm payroll for the month of February is last month's reporting is 129. The forecast for this month was 140, and it came up a whopping 175. So great numbers right there. Surprised the market. So the markets are actually, as a result, responding well to those numbers. We'll kind of get into a little bit with the next screen over, but we also got the unemployment rate for the month of February. We had a 6.6% rate, and we had a 6.5 forecast. So we've been kind of seeing it dip down a little bit, and that 6.5 was kind of important note as the Fed kind of used that initially with their quantitative easing as a gauge before they will start raising interest rates. So there was obviously some concerns about that, even though they've kind of said the last few times that it may not be as much of a factor. Now, it came in at 6.7, so instead of going down, it actually went up. So go figure. We have a higher forecasted job rate, but yet we're expecting the unemployment to go down, and it goes up. So uh, that's why I can't really look at so much the unemployment rate. It gets kind of twisted out there. So last but not least, we got the trade deficit. Not a high impact number here, but it does kind of give us an idea as to what's going on with our trade front. So we had a $39 billion deficit back in at the end of the year in December. And the forecast was supposed to be a pretty big one, 39.7 billion, and it just worsened by about 100 million. So obviously, it's big numbers like that, but when you're looking at billions, is a lot more modest than we anticipated. So decent numbers. So overall, actually great numbers today. So speaking of such, we talked about the market. So the market's actually a mix. Now, initially, all of them were pretty much up this morning. Since mid-morning in the Pacific Standard Time, we have pulled back a little bit. So the Nasdaq, S&P are down. The Dow was up much higher. Now, last time we looked so far this morning, it's only up about 20. So they've kind of pulled back. With that, so they're now contributing the numbers of the jobs, kind of thinking that maybe it was definitely the weather that was holding back the weather, and there was kind of relief, so to speak, emotional relief, saying that the economy is not weakening or as much as they thought it would be, or with some of the bad data we've been or negative data we've been seeing. So maybe the economy is just not growing as fast, but it's not really going backwards either. So they're kind of showing some relief in that in their actions today. So let's go ahead and take a look at the bond market and see what's going on here. So wow, we had an incredible week here. We started way up there, about just over the 105 level, and since have dropped dramatically. We're down to 104.19 for the day, where we started. So we started off actually about 33 basis points from where we were, and pulled back. We're up about 12. So we're only up about 21 basis points from where we left off yesterday. But again, it's worse. We have a huge opening gap, usually worse pricing as a result. So if you factor where we were beginning of this week to this week, we actually dropped 1 point in pricing. So that's a pretty big drop. Where what that means is that no point on Monday is now worth cost you 1 point. So obviously not good. So that means rates have crept up quite a bit. Had a pretty big spike in rates in 1 week time period. All right, folks, we'll head into the weekend. We'll kind of see what next week brings. We do got some news that could obviously move the markets, but from here on out, one of the biggest things they're going to be looking at, of course, is GDP, and they're going to be looking at the jobs numbers. This month, we also have FOMC meetings, so they're going to be kind of watching that carefully, see if there's any change in the policy. Because as we've been getting some conflicting reports as to the short-term interest rates maybe being going up, or maybe if there's any change on the slowdown or the tapering of the quantitative easing. So going forward. All right, folks, enjoy your weekend. You guys have a great day, and thanks for watching, and we'll look forward to seeing you guys on Monday.